to Yellow Tunnel. My name is Vlad. I'm CEO and founder of Yellow Tunnel. And today we're going to talk about our weekly strategy roundtable, where we talk about current market conditions, answer any questions you might have about your subscription, latest signals, and what to expect in the market, short term and long term. Usually I spend 20 to 30 minutes going over the content, and then make sure that at the end answer any questions you might have. So if you do have any questions, please type them in. Would love to answer them. For those of you who are new, Carl, not sure if you guys been here. I think Carl, I've seen you before invited. No, I think most of you guys have been here before. But this is my brief bio. I've been a CTO and worked in technology space for most of my professional career. Worked at several startups here in Chicago in fintech space. Concentrating in brokerages, hedge funds, and been managing my own money for over 15 years, actually over 25 years now. My background is in AI, so some of the companies actually went public. I was fortunate to be part of some of the startups here in Chicago that went public, and I decided to manage my own money using all of the technology and AI. And I've been doing that for many years. And Keith now with Options Hotline is joining us for over a year to add experience on the brokerage side and hedge fund side as an actor. He used to be a market maker, and he has deep knowledge in options trading. Disclosures are very important. Please read them. You can visit optionscreening.com to understand the risk associated with trading stock or options. In terms of trading psychology, before we get into trading psychology, let's talk about the market and see if we to make sure we can answer any questions. So we have different services. We can talk about it. We actually, speaking of the AI, we just released a new chatbot that trains on the data from Yellow Tunnel, right? And you can say, you know, do you trade options? Right. So it basically goes through all of our webinars, through all of our blog and customer support ticket, and trains on this data and makes, you know, and can answer, you know, any questions you might have, right, in terms of options and, you know, which links, where to find these webinar links. So that's the bot, the Yellow Tunnel bot. I encourage you to try it out. I mean, most of the questions are about Yellow Tunnel. So if you have any questions on Yellow Tunnel, it does a decent job answering these. And you can always, you know, talk to a human by clicking on contact and, you know, either schedule consultation or actually, you know, open up a support ticket. But we do offer aggressive power trader. This is where we generate new signals every day. Right. This is, again, same thing. It's an AI model, just like this chatbot. It's an AI model that trains on stock data, stock movements, price movements, earnings data, momentum, and trains on the data and makes predictions or inferences in terms of where the stock can go. So Broadcom, you know, again, technology, some of the software company, Nike's, CVS, some of the consumer retail and healthcare stocks. And then it provides support and resistance, right? The predicted buy and low. You can hover over here and basically say, what's the predicted buy and low? So for spiders, it basically sees 615 support, 622 overhead resistance, and continue to grind higher. But you can definitely see that, you know, model doesn't see a lot of, basically doesn't see a lot of momentum outside of the current level. Short term, for 10 days, it does see momentum, potentially 630, 640, depending on unemployment data, some of the inflation data next week. We have unemployment data on Thursday. It's a short week, by the way. And it seems that the market is overbought, even though it's making new highs, but it's been overbought in the short term. Alex, welcome back. So if you're looking at the SPX, right, we just broke through all-time highs and now facing 6,200 on SPX, S&P index. And that's the major overhead resistance, and support is at 6,000 level, right? We have a major 20-day moving average. 6,000 is where the largest concentration is. And that's why model basically shows that short term, we're still trading an uptrend for the next 10 days. Potentially 622 is the next overhead resistance. So that's spiders. This is our model. In terms of gamma, right, we're using positioning. In addition to the aggressive power trader and our own AI model, we're using more of a traditional technical analysis positioning. If you look at the SPX, you can see that the call wall, right, the overhead resistance is around 60. Next one is 6,200, and that's where we're currently trying to break through it for sell time. If we break through 6,200, 6,300, and most of the puts and call positions are at 6,000 level, right? So you can still see that 6,000 level, and gamma flip point is right below 6,000 level. So positive, the green line basically meaning that the dealers will most likely provide support as long as the stock market is trading above 595. Today we have a pullback in QQQ and semiconductors. Right? It's also broke out. We have everybody talks about gold cross developing, right? Golden cross, where the 50-day moving average breaks above 200-day moving average. So we had it during the tariff, right? When the tariffs were announced in April, we had a kind of a death cross, and now we have this golden cross where 50-day is above 200, and that's usually a bullish signal that provides momentum and follow through. So today QQQ pulled back, still didn't break through the 540. You see support at 540 level, but today value stocks are outperforming. Right? We have a sharp move in value stocks. We have regional banks outperforming, small caps outperforming, and continue to grind higher. And you can also see rotation in the Bitcoin, right? Bitcoin is also underperforming. So I think this is a temporary. Nvidia is down, Bitcoin is down. A lot of it probably has to do with the dollar, right? Dollar is also very weak, and it broke through the April, May, June lows, and now continues to drop lower 96. Next level is 1,000. Oh, sorry, next level is 90. Next level is 90, and this is back into July of 21, right? Kind of during the last recession, during COVID, and then last recession in 22, these are the lows that we got in dollar, around 90. And I think that's where we approach it. So for now, it's a short-term rotation out of the risk-on asset classes, high beta stocks, technology stocks. You can see high yield pulling back, Bitcoin is pulling back. But I think this is a temporary, and this is more of just a catch-up trade, right? Because the value stocks, equal weighted stocks, basically trying to lag in the technology, and they're now going to retest the all-time high. So that's my view on the market. If you look at so let's see what next, right? So if I look at the spiders into the gamma, let's just look at July expiration, right? Let's look at July expiration. We're approaching the next earnings season. And then Tim is back. Welcome. How are you, Tim? And then we look at the August. If you look at the expected move, I think we're talking about 6,300, 6,400, right? Every week, this bar shifts to the right because moving higher. So one standard deviation, we're basically trading above 6,400, right? That's scenario number one. So this is more of a 2 sigma move. Most of the time, if you look at the bell-shaped distribution curve, right, stock market is trading inside the range. So we talked about flip point 52, 595, 605 is a lot of the support, right? So this is second scenario, right? We're just trading in the range. We still have uncertainty about big beautiful bill, right? That I think that got either approved, right? I think, or is about to get approved. So that uncertainty, but there's a debt ceiling and there's negotiations on tariffs, right? Canada I think is coming due, and then, July 14th, July 20th. We have Canada, Mexico, then we have European Union, and then we have China. And based on the tariffs, the market can move one way or another. So the second scenario, we're trading between 6,000 and 63,000, I would say, 6,300, 6,400. And the third scenario, we have signs of recession, right? Unemployment data on Thursday, maybe there's a tick up. A lot of people are concerned about that unemployment is cooling. The hard economic data is cooling, right? We had ISM data is cooling, and service manufacturing data, durable goods are down. So you see more and more signs where majority of the people start thinking that we have a recession, right? So then you have scenario number 3, and we are going to 5,800, 5,600, right? That's scenario number 3. And so you have 3 scenarios, and I encourage you to, in live trading room, I go through all these 3 scenarios based on, I usually do it for this time frame. I'm talking about July, August, because we're doing weekly, monthly options. We also trade stocks, but we hold in position for a couple of weeks, maybe a month, right? Maybe 2. So that's my time frame. But some people think about quarters, right? They hold position for 6 months, for a year, 2 years. Some people think about hours, right? Or minutes. Whatever your time interval is, you want to go through this positive and negative scenarios to make sure you understand how to approach risk management, right? The most important is risk management. I actually typed that here in the chat, the new toy chatbot. So how many of you say scenario number 1? Alex won't come back. Carl, Tim is back. Vital. How many of you say 1? We're going to move beyond 6,400 to April, May, not April, July, August. Unemployment data, hard economic data still supports expansion, and we're going to reach agreement with all the countries on tariffs, and AI is here to stay, obviously, and earnings are going to be strong, right? So then we have scenario number 1. How many of you say no? I don't think we're going to reach agreement with Canada, right? Or European Union or China, and there's always risk. Inflation data might start ticking up, unemployment data might tick up. Maybe it's in this July, maybe it was the June data, maybe it'll be July data, but it's going to tick up, and we just trade in range bound. And 3, there are signs of recession, and we have a sharp pullback below 5,800. Kind of, on its way to revisit the lows by, September, October. So how many of you say 1? Between now and August, we're going to we'll continue to make new highs, but move beyond 1 standard deviation, right? This 1 standard deviation distribution of outcomes. Or we're going to trade in a range 2, or scenario number 3. Alex, Carl, Tim, Vito. Range bound. Okay. Thank you, Alex. Appreciate it. Carl, Tim. I'm going to go with Stu too. I think we are going to be range bound. I agree with Stu. Range bound. Yeah. So I think it's range bound. I do see bullish bias, right? We've been talking about this for the past months or 2, that the market is going to continue grinding higher, and the momentum is behind the bulls. And as long as we don't have hard economic data supporting recession, or we don't have runaway inflation, market is going to continue to grind higher. In June, it did that, and now in July. August, September, I think this is where you want to start raising your cash levels, right? If you look at, if you look at our services, right? We do recommend 2.5% of account positions, or exposure of 2.5% of account value per position in only 4 active positions. So today, let's say aggressive power trader. Let's look at Broadcom, AVGO. So the idea is that if you want to enter this trade, right, you look at it pull back, right? It pull back to, what's the suggested entry price? 273. We're much lower. We had a pretty significant pullback in 266. Let's say you think 20-day moving average will hold. If not, maybe, 240 is a pretty big drop. So I would concentrate maybe 260 strike price. So you can always look at the gamma on Broadcom and see if there's any positioning that to support Broadcom. So put wall is 250. That makes sense. Okay, so 250, that's right about 250 day, the 20-day moving average. So I would say 250, 5% stop loss, maybe 5% target gain. But the idea is that if it does drop, let's say to 250, right? Maybe you're gonna say, okay, 250 is a good support. I think there's a lot of position at 250 in terms of puts, highest put concentration at 250 strike. We do have a breakout, new highs, and I think this is just a consolidation. How much am I willing to risk, right? Well, if it does drop to your stop level, let's say it's 250, right? Then you don't want to be down more than 1% of your portfolio. So that's the idea of aggressive power trader and how you would trade, right? Same thing with Nike or CVS. And the idea is you have 4 positions. These are meant to be short-term aggressive trading, right? You hold a position for a couple hours, maybe a couple days. But if you want to hold something longer, then I would go to weekly power trader, right? Weekly power trader, same idea, only 4 positions at a time, 2.5% of stop loss. But again, you give yourself more room. Maybe instead of 1% target gain, 1% stop, you look 2% target gain stop. Or you can, if you want longer, like Broadcom, I explained, okay, so instead of 1 or 2%, you say 5% to accommodate for high beta, right? Because today alone it dropped 3% on Broadcom. So that's aggressive power trader and weekly power trader, right? This week, Aflac, Disney, right? Some of the stocks that model identify over the weekend, right? This model runs over the weekend and generates signals, and you would enter them, on Monday, based on these suggested entry prices. And you can also manage options, if you want to trade options on any of these signals. And then if there's any of these trades I trade, I think I'm in JP Morgan, then you can actually see, okay, Vlad is trading JP Morgan, right? I entered at 290.74, it pulled back with the rest of the high beta, high momentum stocks. So, but I bought JP Morgan, right? And here I'm looking for 1%, and then maybe 2.5% move in underlying stock. So you can enter your phone number, right, to receive SMS messages. You can see history of all the signals. There's a recording, right? You can watch a recording. I asked them, can you provide link to your webinar on option Greeks? So, and then it will scan on all of the content we provide in our customer service. Not sure, could you please contact? Okay, if not, I just did this. All right, so it is kind of sensitive. So webinars. Right. Huh. That's interesting that it answered this question before. Now let's see. Okay, what is option belt? Okay, so so interesting. So you can use ChatGPT. Not ChatGPT, but our own chat version of ChatGPT. And you can watch the recordings, right? We have live trading room recordings. You can active investor workshop. You can type in the good old way, option Greek, right? And it will come and it will give you all the webinars on options and options Greeks. Any questions? So that's active trader, weekly trader. If you look at the dynamic power trader, this is a combination of both stock and option trades. I am NVIDIA. So I bought NVIDIA, both stock and option, giving you an example, and I just exited out of Cisco position, right? So Cisco was a good trade. So this example of both option and stock trades, right? Where based on your preference, you can trade both. You can see again all the orders position. You can look at my portfolio. history of the portfolio, and then watch the recordings. We do have live trading room, so I encourage you to participate in live trading room. We have a morning bell and a closing bell, and you can join and participate. If you have your own stock you want to analyze, right? Let's say, I don't know, Deere. Then we will provide you with analysis of, again, same thing. AI makes the predictions and shows, okay, Deere, it sees strong uptrend. Deere is breaking out, Caterpillar is breaking out, and you can actually see some of these stocks are continuing to outperform the market. Actually, Caterpillar was a signal for a couple of days and continues to grind higher. Any questions? All right. That's dynamic power trader. We're approaching earnings season, so usually dynamic power trader, I'm looking for 20, 30, 50% move on using the option strategies. Stock strategies, maybe 2 to 5% underlying stock, or 20 to 30% if you use a stop limit as your risk measurement. Earnings power trader is where I trade earnings. As we're approaching the earnings, this is where I am trading options to do risk less, right? Have a well-defined investments where I'm looking for 100% return, 200% return on investment. A lot of people are like to be more aggressive with their risk and look for these high returns. I mean, probability of success is less. Obviously, the higher return you're looking for, the probability of success is less. But when but using our signals and using some of the positioning data, when the stock does move in your direction, in a very short period of time during earnings, this is where you can have these outsized moves. And again, using spreads, either derivative of spreads. It could be an iron condor, it could be a butterfly, it could be just directional vertical spread, but some type of option spread. So that's earnings power trader. And finally, profit accelerator. We do have a profit accelerator. Same thing, but the only stocks trade. So we have Disney, General Electric, JP Morgan, Nvidia. Today is a good day because the stock market is pulling back, so not across the board. VIX is kind of low. Value stocks are still higher. Small caps are higher. Regional backs are higher, but semis are pulling back with QQQ. So same thing. If you look at let's say General Electric, it pulled back, then okay, maybe it makes sense to buy the stock. Any questions? All right, if there are no other questions, actually speaking of this, if there are no other questions, that's all the material I have. Alex, Carl, Tim, Vlad, any questions on recent trades or some of the signals? Again, I think this is a stock picker's market. I don't think buy and hold will hold, so I still think it's a momentum trading. So stocks like Nvidia, I think, is in strong uptrend, right? And this is opportunity to kind of get in because it pulled back. JP Morgan, I think, is in strong uptrend. General Electric, Caterpillar, so some of the industrials, financials. We have a broadening of participation from small caps. So you do have a broadening, right? We're finally above 200-day moving average, above this 2025 lows back in January. So that opens the, I mean, it's only one day, but if the dollar continues to pull back, interest rates continue to go down, I think one of the main beneficiaries are small caps. So they could get, broadening, and that will provide support for the market like today, right? Dow Jones is up 1%, small caps are up almost 2%. So that broadening of participation, I think overall is bullish for the market. All right, guys, that's all I have for today. Thank you very much. You were awesome. Alex, Carl, Tim, Vider, Michael, John, Fred, Brad, Bob. Thank you very much and have a great day. Thank you.